It's crazy how many people in the institutional world are still stuck on zero. Literally zero. It's 80+% of institutions. But the reason you need Bitcoin in your portfolio, and all the institutions, every single one of them is going to have it. This is the crazy thing. Every single one of them will, and I've been saying this for years, right? Get off zero. I've been saying since 2017. And all that means is, and I said 10 years, and now we're, 6 years in, so it's only 4 more years from now, you will be deemed fiduciarily irresponsible if you have zero.
Today, we have Morgan Creek Capital's Mark Yusko giving us an update on the crypto market, the Bitcoin ETF, and why BlackRock is playing a much bigger role in 2024 than any other institutional investor. Yusko believes that the coming bull run will be unlike anything we've seen in recent history. The SEC's imminent approval of the BlackRock Bitcoin ETF application is signaling a massive surge of capital about to come into the space. Bitcoin is currently sitting just below $40,700, up over $5,600 just in the last 30 days. We've seen many rapid cryptocurrency price rises in the last few weeks, and no doubt investors are eagerly anticipating at least one ETF approval, which will bring massive capital pouring into crypto. Yusko points out that just 1% of BlackRock's portfolio will open this floodgate to the tune of hundreds of billions of dollars in institutional capital. When this happens, he says we'll witness a 400% increase in Bitcoin alone, targeting a $150,000 price in just 6 months' time. The Bitcoin halving coincides with the timeline for this price, so we could see the biggest crypto surge yet in just a matter of months. Let's get right into the latest interview with Mark Yusko as he gives us his crypto price predictions and timeline for Bitcoin and what we can expect in the days and weeks ahead.
It's a thing of absolute beauty. So we're up 12% in the past 30 days. So it wasn't Moonvember, because it was Uptober, up 29%, but we have 12% in November. So happy December, by the way. And then over the last year, we're up 123%. And this chart is just so beautiful in that you have volatility, which, we always do. And you even have a long period, almost 6 months of no movement, but you have higher highs and higher lows, a series of higher highs and higher lows. That is accumulation writ large. This is one of the great accumulation chart patterns that you will see. And if you go back to that 1 month chart, I think it is.
Yeah, here.
That is an absolute thing of beauty. And think about it. In this month, I tweeted about this the other day. In this month, we had a U.S. government agency, who shall remain nameless, levy the largest fine against the largest crypto exchange in the world, of which it's questionable whether they had any jurisdiction over, but they still did it, forced the CEO to step down from his role. This chart says, I don't care. I just don't care. And, maybe I need a new hashtag. Bitcoin doesn't care. It is in a massive accumulation. And I said, January 8th, King's birthday. That's the day I believe the approval's going to happen. The first they ignore you, then they laugh at you. It's like a bunch of nerds, geeks, play with your magic internet money, whatever. Then it became a threat. And they're like, all right, we'll kill it. We're going to kill it. And they've tried, right? Multiple times. They've tilted at the windmill, and the windmill just smacked them down, like literally smacked them down. Like, all right, we can't kill it. All right, you know what? We're going to take control of it. And here's what you do. You go after the highest profile. Stevie Cohen comes to mind in the hedge fund space. And $2 billion. I mean, it just 3-year ban. It's like, I've heard this story before. And you get a key figure to step aside so you can put your man or woman in the seat, and then you have control. And you can't beat them, join them. That's what's going on here. This is like a hostile takeover. And it's not like a full takeover. It's not like, Gary's going to sit in the chair and pull the strings. But this is absolutely all right, you're too big to kill, but we don't like you. And we want you to play by our rules. And we want you to pay for our budget for the next couple of years. So that's what they're doing. And some would call it extortion or bribery. Others would call it, cost of doing business. It's kind of like JP Morgan in jolly old England. They have a subsidiary that basically spoofs the price of gold all day long, every day. And they make $20 billion a year. And every once in a while, they get a fine of $1 billion. You can go back and read this in the newspaper, right? No one reads newspapers, but online you could find it. And when they asked the guy, are you going to keep doing this? Or he's like, are you joking? It's the cost of doing business, 5%.
Embracing an unyielding enthusiasm for the crypto realm, Yusko confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Yusko reassures that a long-expected surge awaits, leading up to the highly anticipated 2024 halving event for Bitcoin.
I think missed sometimes is just the amount of money out there that is in these little boxes, these rule boxes. And there's 30 trillion by Eric Balchunis's, I think I'm saying his last name right.
Balchunis. Yeah.
Balchunis, yep. And, 30 trillion, it's a big number, that can't at this point buy Bitcoin directly, right? But they can, in many cases, not all, buy things like, MicroStrategy or Coinbase, because they're listed companies, as opposed to, they like, UBS won't let me buy GBTC, whatever. But when this ETF happens, that's going to be a dicey period, because then it's like, well, I don't have to buy MicroStrategy, which is a questionable software business tacked on to a big honeypot of Bitcoin. And I don't have to pay a premium anymore for Coinbase. And I think Coinbase will do well because their business is going to skyrocket, right? Because they're going to do custody for these ETFs, and they're going to, get ancillary benefit. And when the institutions really come, because yes, there's an institutional bid, but it's with this many people. I mean, I'm not, and I actually have numbers to back it up, because I'm still smiling and dialing and trying to get people to meet. It's crazy how many people in the institutional world are still stuck on zero. Literally zero. It's 80+% of institutions. Now, it's funny. In the surveys, I think like 74% said, oh, we have exposure. Like, well, kind of. And what they're saying is, well, we gave some money to this venture capitalist. And we think they have some exposure somewhere. But, yeah, okay, fine. But that's not you making a decision to buy a digital asset for all the right reasons, right? Reason to own digital assets is very simple. Let's just talk Bitcoin, and then we can go to the others. But Bitcoin is 0.0 correlated to bonds and 0.15 correlated to stocks. Those are the two lowest correlations of any meaningful asset class, like high yield bonds, hedge funds, private equity, international stocks. If you take anything with, kind of $500 billion and up of value, you could find small things like, stamps or coins that have even lower correlation. But for a meaningful asset class, this is the least correlated of all of them. And so when you add it to a Markowitz framework, meaning, when you take cash, riskiest asset you could ever own because you lose to inflation, and you add bonds, which have more volatility, people are still stuck on this idea of volatility, and volatility is your friend. So what you want are assets like Amazon, like Apple, like Microsoft, not Microsoft, I hate Microsoft, that have this high volatility, but they have long-term accretion to your portfolio. But the reason you need Bitcoin in your portfolio, and all the institutions, every single one of them is going to have it. This is the crazy thing. Every single one of them will, and I've been saying this for years, right? Get off zero. I've been saying since 2017. And all that means is, and I said 10 years, and now we're, 6 years in, so it's only 4 more years from now, you will be deemed fiduciarily irresponsible.
As we stand on the precipice of fall 2023, merely a month away, the crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of September's price fluctuations in pursuit of profits. Yusko's outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. He sees the race toward a 6-figure price target set to unfold in just under a year. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x with each halving event, hinting that 2024 could catapult Bitcoin from $10,000 to an unbelievable $100,000. What do you think about Mark Yusko's prediction for Bitcoin, the crypto market cap, as well as the institutional capital pouring into the space? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.